Welcome back. India's recent growth story has been fueled by capital goods, not by consumption. Although the first quarter GDP did show a welcome 7.5% growth in private consumption, the July IIP number shows that consumption, especially of non-durables, FMCGs, is subpar. To get a handle on the consumption scene at a macro level and at a micro level, I have with me the Managing Director and CEO of Tata Consumer Products, or TCPL, Mr. Sunil D'Souza. TCPL itself, of course, posted a 16% revenue and a 22% EBITDA growth in their first quarter. Their international and unbranded divisions did very well, but tea and the recently acquired Nourishco brand of drinks had a subpar quarter. Mr. D'Souza, good morning, and thank you very much indeed for joining us.
My pleasure.
Well, let me start with the macro question that prompted me to invite you. We still see disturbing signs even in the July-August consumption numbers. Are these correct, or do you think that the consumer is still biting? Can you give us a picture of the rural and the urban consumption?
So overall, Latha, if you look at it, I think you heard a lot of commentary from the FMCG majors during the end of last quarter saying green shoots and yes, people are bullish for a recovery. I would say I would still wait and watch because while the recovery will be there, I think it will be gradual. It will not be back to double-digit growths of the past very quickly. And for a couple of reasons. I think the recent weather phenomena impacting rural with drought in May, June, and then excess rainfall. Yeah. I think that's part number one. Part number two is overall, while you look at inflation, if you disaggregate it, I think food inflation is significantly higher.
Yes.
So from that perspective, I think there is still a little bit of pressure, which I would think when the crop season comes out, we should start seeing it easing up a bit. That's number one. Number two, there is a trend, however, that rural was significantly lagging urban. I think rural is starting to catch up with urban right now. So from that perspective, it looks good. But double-digit growth, I would say some time to come.
Okay. In terms of volumes, how May have you done? Your second quarter is almost up. We have only about 2 weeks to go. So did volumes look better than Q1?
I would say volumes broadly in the same ballpark as Q1, not a significant difference.
Okay.
But that said, we are starting to see various fluctuating effects of commodity prices.
Oh.
Tea, for example, because there was drought in the north and then excessive rainfall, tea prices in the north are about 25% off. So that will start moving into the consumer domain as inventories run down. Right? There was a bit of excess rainfall in Gujarat and brine has shot up. So that means salt prices should be slightly higher. Coffee, I'm sure, is I would say the latest gold from a commodity. This thing hitting, I think Robusta hit about $4,500, which is more than 2x what it was 1 year back. So commodities complete topsy-turvy ride. I think that is the one piece to watch out for.
Okay, no, that's very useful information. Let me start with the most premium of items. Is the premiumization trend still intact? Premium products do well. It's the mass products that get hit by, inflation and drought. Is that a fair assumption?
I would broadly agree with you, and that's exactly what we're seeing in our portfolio as well. So while overall we talked about tea being under a little bit of pressure, the premium and the mass premium continues to do well. It's the lower segments which are under pressure.
Okay.
2/3 of my portfolio is now premium to mass premium, which is quite okay. In salt, value-added salt is growing at high double-digit versus base salt, which is still chugging along at single digits. So overall, that trend, I think, you will see for some time.
Okay. Just a word on the overall numbers. You did revenues, 16% in first quarter and 22% EBITDA. Repeatable?
Again, if I break it up, Latha, out of the 16%, base was 10.
Okay.
And the balance was due to acquisitions.
Yes.
I would say will be broadly in the ballpark.
Okay. Okay. What are the strengths? Which has Nourishco re-emerged after a quiet summer beaten by the terrible summer? Likewise, tea. Within these, are you seeing any improvement? Those were the ones that didn't do well in the first quarter.
I would say for tea, broadly, the trend remains constant. Volume growth, I don't think we're seeing it coming up back rapidly while we are holding market share more or less. There is a bit of stress on the category overall. That's number one. Number two, to answer your question on Nourishco, it was a couple of things. One was the high temperatures, because of which we didn't see out-of-home consumption, and our Nourishco business, especially with the cups, Tata Gluco Plus, etc., is primarily out-of-home. So that was number one. Number two, there is increased competitive intensity in the beverages space with the entry of other players. And I think we were slightly late to the party in terms of correcting our pricing and go-to-market.
Okay.
So I would say we're probably still one quarter off to see the Nourishco growth coming back totally. But broadly, directionally, month on month, we are seeing an improvement.
Okay.
The other big priority for us as a company is to make sure that we bolt on Capital Foods and Organic India, are two acquisitions. Last quarter, Capital Foods grew 9, Organic India was -2. Directionally, we're in the right ballpark. We finished the integrations. Now the engines of distribution, innovation, marketing, as they start firing, and we are seeing growth trend in the right direction.
Okay. I take your point that some of the trends of Q1 are continuing in Q2. But for the full year, as you said, as the harvest hits in terms of money at the hands of the consumer, will second half be much better? I mean, better than your 15.3% margins, your 22% EBITDA, will both be better?
So overall, Latha, I do expect to be on a significantly better trend in the second half versus the first half for a couple of reasons. A is, our entire distribution expansion of expanding width in the rural areas and including depth in the outlets by adding a third salesman in the big urban areas, splitting the portfolio. That would have played out completely. Okay. Number two, my digitization of my front end, and we're moving to a Salesforce-based digital analytical platform where I can sharpshoot very well outlet by outlet. I think that comes into play. Number three, my acquisitions integration is done. Now the innovation engine has started firing, marketing starts to fire.
Okay.
Number four, overall macros, I do expect to be better. And especially if I look at last year's second half, I think we are cycling relatively softer numbers. Okay. So from that perspective, we remain confident of a good full year.
Okay. Oh, that's good to hear. Salt and Sampann fired well for you in the first quarter. Will salt be a big problem now because of those excessive rains in Gujarat?
Not exactly, Latha, because if you look at over the last 4 years, from the time we formed Tata Consumer, our salt market share has moved from 30 to 39. Okay. In that space, we've seen rapid inflation, and where earlier it used to be a 1 rupee per year price increase, I think in FY23, if I'm not mistaken, we took roughly 5 or 6 rupees at one shot because of all the petroleum-led and brine-led cost increases, but we still delivered market share and growth. Okay. So we will take it in our stride. We will figure out how to balance margins and growth to make sure that we continue to drive this engine. We've always maintained salt mid-single digit volume plus a couple of bips of price mix. I don't think we're changing the forecast there. Okay. Sampann last quarter plus 37. There's no reason, and we've always guided for a 30 plus. I think we remain confident of that number.
We don't see an ad blitz from you on these products, especially Sampann, which became a household name during COVID when people shifted from unbranded to branded. What's your ad expense? Will you up it?
So last quarter for the India business, our ad expense was roughly 7.8% A&P, which was significantly higher than last year. As a company overall for the last quarter, our A&P was about 29% higher than the same quarter last year. So historically, we've been underspending, and directionally, we've been raising our A&P growths. But just a perspective that, especially when you talk of Sampann is basic staples. Yes. It's not high personal products which make 70-80% gross margins and therefore have affordability. I make barely double-digit margins, and therefore I need to be very, very mindful about where I'm going to put my investments. Okay.
No, that's a fair point. Since I'm a consumer, I know what Sampann provides. Which do you see as the growth engines? For instance, Ching's. Will it be Ching's? Will it be Organic India? Which will be the high margin products?
So let me answer it in a couple of ways. Our basic platforms have been tea and salt. And tea and salt, we've always guided for mid-single digit volume plus couple of bips of this thing. And then the rest of the growth businesses earlier used to contribute to 20% of our portfolio, and we had guided for a 30% growth. we are now saying they will contribute to 30% of our portfolio and grow at 30%. So Nourishco, Soulful, Sampann, and now Ching's and Organic India, all of them put together will deliver a 30% growth. In terms of margins, while Sampann is slightly lower than my category average, but higher growth rates, Nourishco is broadly at par with my category, my overall company margins. Soulful is slightly higher. Ching's and Organic India, one of the primary reasons why we did these acquisitions were because we saw growth potentials for significantly accretive margin categories. So those are high margin businesses.
Okay. 15.3 was what you delivered. Full year, will it be more?
Let me say we'll be in the ballpark.
Okay. Well, just a word on your distribution. You had added 1,300 distributors in FY24, primarily in urban markets. The strategy for 25 is?
So the strategy for 25 is to stabilize the 50,000 plus population town distributors which were added. That was number one. And number two, in all million plus, which is the 10 lakh plus population centers, and a few 5 lakh plus population centers in the south where there is high affordability, we have split our front-end salesmen into three different pieces. There are three people going in. Tea plus Organic India, Salt plus Sampann, and Capital Foods plus Soulful, which then gives me depth in the outlet. Three different people going with focus, with, not getting distracted by the whole wide range of the portfolio. I do think outlet by outlet will start gaining market share. Okay.
Finally, you were the acquisitions man. We saw a string of acquisitions after you came in. Anything on the table? Anything we should hear in FY25?
See, longer term, we always maintain we will grow organically and inorganically. But I think in the shorter term, immediate shorter term, I would say, we've got to deliver the business case for Capital Foods and Organic India, which then gives us the right to go back and ask for more investments. But first, I have heads down, execute against our business case and deliver the numbers.
Okay, all the very best. It was a pleasure speaking with you, Mr. D'Souza. Thank you for spending time with us.
Thank you. My pleasure, always.
Okay, so that's a bit of a caution in the second quarter itself, but very confident of the second half of the year. That's the word from Tata Consumer. We're going to a break and thereafter, Chartbusters.